Yo, are we live? Is this thing on? Yes! Amazing! Spencer Israel, Jason Purrs, JC Parets. This is Stock Market TV. Welcome, everyone. We had ourselves a good old-fashioned FOMC hoedown about 32 minutes ago. What'd they do? They lowered interest rates or the federal funds rate by a quarter point. Jason Purrs, we knew that was coming, right? But of course, it's not about what they said. It's about how the market reacts to what they said. So let's get into it.
Let's do it.
Listen, I'll start by saying that I normally don't care at all about this sort of thing, but I think I found myself more interested this go around. I just think that there's more vulnerability. I think that the short sellers in the equities market continue to get creamed. So reverse engineer what the next, squeeze in equities is going to look like. And, seems like lower interest rates would fit right in there. So you tell me, Mr. Jason Purrs, lower rates with the stock market making all-time highs and they're cutting interest rates. Is that bad for stocks?
No, not at all. I think that's the thing that everybody's not understanding here is just ride the trend. It's going up. They're adding liquidity. There's every reason to be bullish right now. Now, once again, yes, everything comes to an end. Someday the bears will be right. JC, you could wear your hat that whole year long and your shirt that whole year long. But they're not right yet. This isn't the time to start selling all your positions and running for the hills. It's, hey, we're in an uptrend. Hey, we're cutting rates. Historically, that leads to higher stock prices. I think it's a great time to own stocks here. I would continue to stay long. I wouldn't do anything different.
It's interesting. There are a lot of people who, they get upset over something like this. They're like, oh, they shouldn't be cutting rates. It's going to end badly. The stock market's at all-time highs. Why do they need to be doing that? Yeah, maybe. Yeah, maybe it's dumb. Maybe it's stupid. Maybe it's inflationary. All those things. Yeah, maybe. Yeah, I guess we'll see. Well, right now, which is what we're talking about, stocks like it. So we can fight that and, protest the bull market and not participate, right? And take our ball and go home. We could do that. Or we can follow the trend. And for me, what is trend? For me, the way I answer that is that when I wake up on Monday morning or this morning or tomorrow, I want to know how I should be spending my time. Should I be spending my time looking for stocks to buy? Should be spending more time looking for stocks to sell or raising cash or looking for alternatives to, U.S. equities, right? What should I be doing? And then so if the answer is, okay, it's a bull market, we should be spending our time looking for stocks to buy, duh. Okay, well, which stocks, right? Which stocks do we buy, right? And then that's where that goes into. So that's why for me, the market environment is always step one. Your strategy cannot adapt to the overall market environment. That strategy is going to fail. So, to me, it starts with this, and that's how I look at it. You like that, Jason?
Yeah, that makes sense because it's you have to understand the environment, and once again, it's the reason why we keep rotating. It's not the fact that we're just going, hey, we want to own this specific group of stocks, or saying, hey, we're going to buy the S&P 500. We're talking about running through as these sectors are rotating. We're getting long different things. You've been talking a lot about biotechs. We've been talking at Gold Rush a lot about energy just getting started. The copper miners were, earlier this year, and now those just got started. And now it's going to energy stocks, mainly refiners, mainly international energy. So as we look at these things, it's yeah, these cycles will shift and they will change. But if you understand the environment, you know where to be. And that's going to be the most significant thing we can do as traders, is to be in the right stocks at the right time and doing the right thing. And I think nothing does that better than intermarket analysis and technical analysis.
Let's throw up slide 2 there. This, I just can't get enough of this chart because it really tells the story. It's the lack of volatility in the bond market that we have seen over the last 3 years that the stock market just really loves. The U.S. 10-year yields at 420. Not really doing much here. U.S. 10-year yield is at 420, right? And you think this isn't a simulation. 420 for the U.S. 10-year yield. And guess where it was in October of 2022? It was at 420. So literally big nothing burger in the U.S. 10-year yield. And we're not banks, right? The banks care about the Fed funds, and I know it starts there. But at the end of the day, for us who are just trying to make money from all the shenanigans, the U.S. 10-year yield's the benchmark. And it hasn't done diddly squat in 3 years. And how have stocks done, right? Dow's up 50%, S&P's up 80%, Nasdaq's up almost 130% during that period. So it's the lack of volatility. This I would venture to say is the lowest volatility period. You can slice and dice, and I've been through low volatility periods in the bond market. But man, I gotta tell you, I think this might take the cake as the least volatile period or the bond market of my entire career. I would venture to say that.
And also, I would also say something to add to that, which is interesting. It's probably the lowest volatility we've ever seen in energy stocks. It's the lowest volatility we've ever seen in the CRB.
You think that's a coincidence? So that the volatility is that compression in interest rates. So, folks, if you're out there listening, you're thinking about, okay, well, the Fed's cutting rates. What does it mean to me as an investor? That's why we went live today to have this conversation. So, for everybody at home, everybody in the chat, what's up, guys? Listen, there's nothing wrong with watching basic cable. I don't do it, so we appreciate everybody being here and tuning in with us. So, I think about it as an investor, why should I give a damn that the Federal Reserve cut 25 basis points and this guy, he's going to get fired in 6 months. Trump's going to bring one of his cronies to come in there and do. I get all that. So what does it mean? What am I going to do about it? How do we make money? So there's a couple of things, that I like to think about, in the small caps. Throw up the next slide there. Is small caps, right? So it comes back to equity. So I'm an equities guy, right? I'm an equities guy first. Jason, I would argue, is an equities guy, but not an equities guy first.
Yep.
Right?
Yep.
He's a futures guy first, equity second. I am an equities guy first and foremost. So I bring it all back. So when I see interest rates going down and I see the Russell 2000 small cap index closing at a new all-time highs for 3 consecutive months, all-time highs for the Russell 2000, that doesn't scream higher interest rates. That screams lower. Now, what's driving the Russell 2000 and the small cap index is mostly technology and industrials and healthcare, right? Not the financials, not the regional banks. And then, so this morning, regional banks were ripping, and now they're ripping even more, right?
Yeah, look at
what does it mean?
Yeah.
What does it mean to investors? All this shenanigans, the FOMC, blah, blah, blah. What does it mean? What are we doing about it? To me, I don't think you're going to get the next leg of this bull market in small caps without financials participating. There's 260 of these things in the Russell 2000, 260, right? More than biotech, right? So technology has done a good job, obviously, new all-time highs for small cap tech. Industrials have done a nice job, all-time highs for small cap tech. Discretionaries have not participated. Healthcare obviously has. Biotech goes up every day. Financials is the missing piece here for small caps.
And so it goes back to what you asked earlier, which is the CRB index in low volatility and bonds in low volatility, is that all together? And it's like, yes, that is one trade. And also the financials are part of it. A lot of people forget in 2021, everybody remembers energy. Oh, energy was the best place to be. That's true. However, they forget that the regional banks were actually doing pretty well that year as well. You look at like international stocks, they were doing pretty well that year as well. So like you kind of see like some people just don't look at the whole picture sometimes. And if you're looking at this and you're going to bond markets in low volatility and energy in low volatility, you want to see that volatility expand. And when that volatility expands, follow the direction it goes. Because most likely what I'm looking for here at least is the 10-year yield to continue to move higher. I'm also looking for energy stocks to also follow higher with it. So that's the thing I'm looking at here as it pertains to equities. So I think the energy stocks are set up to make a big move. I think that breakout level, we get above, 50-50. That's a time that you really want to own the energy stocks, and they're just going to continue to take off. And I think the Fed has created the right environment. That's something to think about more than anything here, which is it's just more environment. If we're looking at the environment, we're going, okay, well, is this a good environment for stocks? It's like, yeah, the Fed is cutting rates. The yield curve is widening, meaning the 10-year is moving up. They're cutting rates in the short end of the curve. So we're continuing to be in a liquidity-driven bull market that's probably going to go and rip into year end and possibly a little bit into next year as well.
Throw up slide 2, right? Because energy is included in this chart. And man, you see a large cap value making new all-time highs, right? In the large cap value in the Russell 1000. What I find really, really interesting here is the new all-time highs that we're seeing in the small cap value, right? So this is the Russell 2000 value index, and it's breaking out of this monster base to new all-time highs. So you got 25% financials, 11% real estate, almost 12% real estate, 11% industrials, 10% healthcare, right? A lot of that healthcare is going to be in the growth, right? So a lot of financials, and then energy 6.8%, which is interesting because in the small cap 2000 growth, it's less than half that. It's 2%. So I think this is really, really interesting. Since we're talking here, it's 242. Stocks, Dow's still up 280. NASDAQ's down slightly, which is interesting. Crude oil is up 2/3%, 58.60. Copper up 2/3%, 535. Gold flat, silver flat. VIX down a little bit. Forex markets, not really anything going on. Big nothing burgers, what it looks like here. What do you think?
Yeah, I don't think, like, once again, it's like the reason why you and I'm similar to you, JC. I don't pay attention to this. I'm not going to sit there and watch him talk and dance around whatever questions or whatever. It's interesting. It's fun.
Are you more interested this time?
No.
You're not? Okay, because I am.
Yeah.
I actually am.
I'm never extremely interested. I'm interested in, his speech, I guess, is the only thing, like, I guess.
I'm not going to watch that.
I'm not going to watch it.
Can I get the Cliff Notes?
I'm not going to watch it, but you'll hear, like, is he dovish? Is he hawkish? And if we figure out if he's dovish or hawkish, that's really it. Like, to me, it's he's been cutting and continuing to be hawkish as he's cutting. I think the Fed's very politically driven at this point. I think they're going to continue to cut rates. And then he's going to continue to talk hawkish. I think that's just kind of the game plan right now, until somebody else gets fired or something else happens or whatever. And then they're just going to continue to cut. I think it's like what everybody says. Everybody's like, oh man, oil and energy aren't going to go anywhere. Donald Trump wants lower gasoline prices. Yes, he says that, but what's he doing to combat that? He's lowering rates. He wants more liquidity in the market. He wants to give out stimulus. He wants to do all of these things, 50-year mortgage rates and so on. This all creates inflation. And once again, like, we're not talking about what it does to normal people. We're talking about as traders who want to take advantage of that and make money. That's what you do. You don't sit there and go, oh man, this is going to be bad for me. It's going to be bad for the economy and so on. You go, okay, how is this going to work in the market? And how's this going to transfer to stocks? And then how do I make money? And that's what we do here at All Star.
I do want to note. We also want to note that IWM is ripping. Small caps are ripping. I mean, they're off the highs of the day now, but the IWM had quite the reaction to that.
And seeing out of value too, not just the growth stocks. Can we talk about the yield curve? Not seeing anything there either. Like, really a nothing burger in the yield curve, which is a little bit surprising. I expected if we're going to see anything, might be seeing that curve move and not seeing nothing. Curious to see when they all settle in, how the probabilities stand on the cut. So I spoke to Netto. So John Netto is our resident, Fed watcher extraordinaire, and he said that the cuts and the dots are fully in line. Mm-hmm. Says they announced $40 billion a month in T-bill purchases, but it's entirely due to the repo markets. So
repo's under some stress right now for sure.
It's the market's reading it as QE bullish, so buy stocks.
Hey, JC, how's this for a fun fact? First time in 6 years that 3 members of the FOMC dissented.
And then, so what does that mean, dissent? So the 3 members didn't want to do it, the cut?
Yeah. Right. So nine members. There's 12. 9 voted for a quarter-point cut. 3 did not.
All right.
It's more of a fun fact than anything else, but
all right.
Isn't
Trump going to bring in one of his dudes to go in there and make sure that they keep cutting rates? Isn't that what's happening?
Yeah, most likely.
Yeah, I think there's a possibility that they pause for a minute, and there will probably be so much political backlash to that they will continue to cut. Like, I think they're going to continue to cut until inflation gets out of control or something breaks or something changes.
He says the next cut not priced in until June. The market just 2 for all of 2026, 2 cuts. And he says, who cares? He's gone before even the next cut is priced in.
Yep.
So inline Fed may be a bit hawkish, but the T-bill buys because of the dissents.
I love Netto. He's great. Dude, he's like the best resource on this shit.
I'm like, yo, Neto, come swing by and come talk to us on the show. And he's like, oh, like he's talking with like billion-dollar RIAs right now. I'm like, oh, sorry, big time. You can't spare a moment for us peasants over here.
Hey man, he's a superstar. Love that guy.
I mean, he's a literal market wizard. Like he's actually a market. He's like in the market wizard's books.
Yep.
And I get to text with him about the Fed.
And he's a good dude, man. I love him. He's a good.
He's a good egg.
So, but yeah, you guys haven't read his book, Global Macro Edge, one of my favorites. Definitely check it out. It's a great book.
Okay, so bull steepener. Can we walk through what a bull steepener is?
Yeah. So if we're looking at like the environment we're
like
in,
something I'll order at like one of these restaurants like in Montana.
It is.
Can I get a bull steepener, please, medium rare.
It might be. It might be, honestly, or it's a bull with the nose ring is maybe the bull steepener. That kind of makes sense.
Nice.
But if we're looking at a bull steepener, basically what we're saying is the spread between the short-term rates, which are like 2-year to 3-month, which is what we're looking at for the Fed. The Fed controls the short end of the curve, and then the long-term rates, the 10s and 30 years. And so the Fed doesn't control the long end of the curve. So as you're seeing that spread out and widen, meaning the Fed is cutting rates and also yields continue to just hold, like JC showed earlier, they're holding that same level. As that continues to widen, we're looking at banks creating more liquidity. So as banks are able to create more liquidity, they're borrowing from the short end of the curve, meaning they're borrowing from the Fed rate's low, and then they're loaning money out to other people at the higher rate. So they're making that middle. So as that's happening and as that spread gets wider, we call it a bull steepening because it usually leads to bullish environments. So now we're in a bull market and we have more of a bull steepening and we continue to see a steeper curve. Like, I just don't see any reason to be bearish here yet. I can't see anything. And I think so many people are looking for it and they're going, this is going to break. This is going to happen. I can't believe they're cutting rates and all this stuff. And it's like the trend is up. A bull steepener is very bullish. We're also looking at that being very bullish for commodities because usually once we really start to see that curve move, the commodities sector really starts to move as well. It's also very bearish for the dollar, meaning
I was gonna say, let's talk about the dollar. You took the words right out of my mouth. I love you, bro.
Yeah, me too, man.
You see that, guys? You see?
We're right there. We're working.
We're right. I mean, it's beautiful. It's beautiful.
So hit the next. I think it's the next slide or the one before that.
Yeah, throw up the dollar.
Yeah,
slide 8.
So the dollar is always kind of moved. This is what we're looking at here. First one is the CRB index. Now we're moving to the dollar. And so when we're looking at the dollar, we're in this environment. So I put in red, strong dollar environment. So those red arrows are showing a strong dollar environment. That's not a bull steepener. That's called a bear flattener. That means the curve is actually heading downwards, which means the money supply is getting tighter. So as the money supply is getting tighter, that's a good environment for the dollar. We're actually in that environment for many years after 2008, which is part of the reason why we were in a strong dollar cycle for so long. Now we're moving the opposite direction. We had that one big last gas move in the dollar that was in 2022, which peaked in October 22, which coincided with stocks bottoming. And now we're in a bull steepener environment again. As you see, as soon as that started earlier this year, we really got that big drop down in the dollar. JC and I were talking a lot about the positioning in that dollar at that point. Everybody got off sides. The dumb money was long as they possibly could be. And the next thing you know, it starts to move lower into this bull steepener environment. I think it's going to hang on here. I think we're going to see the dollar continue to move lower. I think the dollar is going to head to 90. And I think that's going to be good for a lot of the stocks we've been bullish on currently, JC, whether it's the international names, the energy names, gold miners, whatever you want to say. Like, there's a lot of things that's going to be good for. I don't think it's really bad per se for anything else, but there will be things that are going to outperform in that environment.
Man, what's up with this God candle that we're putting in on the transports, man? Small caps making new all-time highs, transports and Russell 2000, they dance together. Let me actually show that chart because it's such a powerful chart. Because I feel like a lot of people don't know that. Can you throw up the new slide 2 there?
Yes,
I will. A lot of people don't realize.
After slide 2, I want to bring in Kenny because he's been getting down and nerdy. I think he was trading
Kenny
just
in the
now.
house.
Ooh,
yeah, nice, dude.
All right,
nice.
Wait,
Here, throw it up.
Yeah, new slide 2 first, and then we'll.
New slide 2. Let's do it.
So, we're talking about the implications, the bullish implications for small caps if interest rates are going down, right? They're cutting rates, good for small caps. Well, what else is it good for? What are you good for? absolutely nothing, right? What is it, right? So small caps and the transportation. I mean, man, it's uncanny how close they're moving together. So if the Russell 2000 is making moves, transports are making moves with it. You know, look to them together as a heads up that this is working. These are working or not, right?
Yes. No, that this is good. And it's confirmation of that bull market. Like, this is what we're talking about here. Like, we're not saying like, hey, we know everything and the way this is going to go perfectly. We're saying like there is so much confirmation of a bull market here. And if you want to make money, you just continue to ride these trends. And don't overthink it. Don't overthink the Fed. Don't overthink the news. Don't overthink, like, people. We get emails like every other day right now about copper. Hey, people are stealing copper. That's probably bearish for copper. Like, people are overthinking everything right now. And really, it's like as simple as, hey, we're seeing transports in an uptrend. They're confirming the small cap strength. We're seeing everything we'd want to see based on Dow theory, intermarket analysis to stay long this market. And that's what we're going to do.
And find new opportunities within the rotation. That's it.
Yep, that's it. Keep it simple.
All right. Kenny was getting down and dirty in the queues. He was in the chat a few minutes ago. Said there was some nice chop.
What up?
What's up?
Oh. Yo, he's on mute.
Oh.
Get him in here. Get him in here.
Just remember rule number 1. Shorting is short-lived and you're going to fucking die. Not here. not time to beat around the bush. Don't forget, I'm coming at you full steam with these balls. We just got a faux show, bro, and I was actually.
Can you show me? Show me the faux show, bro. Show everybody.
Yeah,
all right, guys, you're in for quite the treat. I didn't know Kenny was going to drop in. Love it.
I didn't know either. The spontaneity.
I gotta find my charts. Oh, there they are. Bang. So we just faux showed, and now we're broing. So
all right, so show.
All this market does is trap people who actually think the market has a chance to go down, like morons like me. One day. Sometime in 2028, when we actually have a 4% pullback. But see, this is the move where I normally would get short, but we stayed inside the first reaction candle. So because we broke the low, then we came back, and then back above prior day VWAP, you're kind of forced to buy. And so far, so good. I mean, I sold into the move already, but a lot of excessive chop. You know, when we had the first faux show and we broke new highs, I didn't think we'd get another chop. And then the second chop, that traps, again, the people that still think there's a chance the market could ever go down again in our lifetime. And now you're getting punished. So, I mean, that's why I love being a bear. You know, I remember all the mistakes that I've ever made feeling bearish. Nothing confirms bearishness now. Everything's a confirmation of bull, like you guys were saying. So let's go Dow 80,000 by next Friday and Q's 1,000. So let's go fucking crazy.
Kenny, the only perma bear I've ever met that actually wants the market to go up. It's a walking contradiction, really.
Well, I know I want it to go down just enough so I could get me some good buys.
Okay.
And by the way, I love me some short squeezes. The Q's is a nice trade just right now. But you know what our trade for the day was? You know it, people. You love it. It's Tilray.
Oh, God.
And she's back, baby. She's back. Tilray reverse split a couple of days ago. Welcome back to the party, Tilray. So the squeeze is on, baby.
You guys were saying growth is back on. If Tilray is back at the party, growth is back on the table. All right, that's
Tilray and these little pod stocks are so little; they're not anything. They don't matter
because these are the only stocks that haven't been resurrected in 2025. The year of the dog shit stock comeback were the weed stocks, and now the reverse split is the catalyst that everybody needs because they take the liquidity away, they light the fuse, and then the squeeze ensues. That's why Open has been awesome. Stitch Fix. What was the other garbage we're trading today? iRobot. Come on, iRobot's back. Stock's up 300% for the week. So if you're going to keep playing this game, we're going to play it right there with you. So good times. Good times.
XLE did the same thing. They had a reverse split too. And that ETF and the Spider ETF. I haven't seen that much. So it's an interesting time in the market.
Yeah, and it's virtually impossible to be shorter. So. If you're going to try, you better have you better be ready to cover and go long just like every other day. So, we're right back on track. And here we go. New highs. But all right, I'm going to get back to this. Good hanging out.
Thanks, Kenny.
Hey, thanks for coming on, Kenny.
Be careful.
Oh. And all right. He's gone. Cool. All right, I think that's actually a good place for us to wrap it up. I'm sure Jerome Powell's
Look at
probably
this
still going.
consumer discretionary. These homies are ripping. They are ripping. If this consumer discretionary, which has been a massive underperformer this entire bull market, literally the whole bull market, on a relative basis, peaked at the end of 21 and has been making lower lows, lower highs. This is consumer discretionary relative to the S&P 500. If that turns around, this Tesla is the biggest company on earth.
JC, did you see the industrials? That's a pretty big candle setting up too, for a spider ETF.
Yeah, look at that. Wow.
So
Wow.
It's got the industrials, man. So it's Jets. It's moving really nicely. So there's a bunch.
Dude, look at small cap industrials are making new all-time highs today.
Nice.
I mean, I guess that there's a lot of that IWN. Look at the stick in IWN. This is small cap value. Look at that stick today.
And there's a lot of energy. There's a lot of financials in all the value ETFs. So that's something to keep an eye on.
Dude, energy's ripping. The short sellers have been all over OIH and XOP. Both of these things are making new highs. I mean, this energy looks fantastic, dude. Look at that Chevron. Look at that stick in Chevron today. They're really buying them.
Yep.
Wow, look at that. Yeah, I think there's a lot of opportunities out there in the market. You just got to look. You know, if you're out there trying to short and fight this market, I think you're going to have a hard time. You know, the correction that really got going in on September the 11th, when the percentage of stocks on the New York Stock Exchange above their 200-day peaked, and also the New York Stock Exchange advanced decline line also peaked. That's an interesting sort of like, okay, is that over? Is this correction that we've seen? Was that it? You know, and I'm thinking that potentially that's it. We've seen it, and it ended 2 weeks ago.
Well, JC was saying the trades are out there. You got to look. If you are in the market for more risk, if you have cash to put to work, if you're looking for trades to take advantage of what appears to be a very nice bullish wave that we are in the midst of right now, might I interest you in Breakout Multiplier? The link is on the screen, breakoutmultiplier.com. The guy has just put on 2 new longs. I believe it was yesterday. What's today, the 10th? Yeah, yesterday. They put on 2 new bullish trades, more coming every week, especially in environments like this. We talk about making hay while the sun is shining. This is the time to do that, right? So breakoutmultiplier.com. Shout out to the guys who have been crushing it all year. You go to that link on the screen, you sign up, you get the newest trades, and you want to add some juice because, that's what we're in right now.
I just ran into a Breakout Multiplier member over at the church just a couple of hours ago. Our kids were singing Christmas carols at the church, and he's a Breakout Multiplier member, and he's killing it. He's like, hey, I think I'm going to join that country club. I was like, oh, the trading's going pretty well, huh?
Nice. No, if we're talking about Breakout Multiplier too, we were talking about all these low volatility areas like energy. They're taking advantage of those areas with options. Like options get very cheap, but you have to know people who know how to trade those options. The guys at Breakout Multiplier absolutely do. They do a great job. So that's something that they're taking advantage of right now. So if you guys get involved with that, that's a great trade, great setups. They've been doing a great job all year long.
Absolutely. All right, Jason, JC, Kenny, thank you guys for joining me on the day of our final 2025 Fed meeting and the final Fed meeting of Jerome Powell's tenure. So
is that true? He doesn't do the January ones?
Oh no, I think he'll do my bad. I think he'll do that.
Yeah, he's out. He's gone.
I think he's got one more after this.
You're right. He's got one more.
Dude, he's such a lame duck. He's like the lamest of all the ducks.
What are you gonna do? That's life. Thanks for watching. If you're watching us on YouTube, do
shut up and
me
keep
a quick favor. Hit the like. I would appreciate that. Let's take stock of the survey I asked in the chat here. Does today's developments make you more bullish, less bullish, or the same amount of bullish in U.S. stocks in 2026? 61% of you are more bullish for the next 6 months. All right. We'll take it.
All right.
Let's do it.
All right. Guys.
Thank you, guys.
Get back to trading.
Go make some money. Enjoy the market. This has been fun. We'll see you tomorrow morning on the morning show.
YOLO responsibly.
Later, guys.